Alright, Assalamu alaikum, and let us start with the first area of management accounting, F2, that is management information, right? So let us start with it. Management information in our course, right? And fully it is management financial accounting. Now, what is financial accounting? The recording, the processing, and reporting of financial information to produce financial statements, right? And it's mainly it's based on historical information, right? It is based on historical information, and it is required by law, right? Then we have manage management accounting, the preparation of financial and non-financial information to support management activities. It has no fixed format. It is not required by law. It is just for the management usage. As far as the cost accounting is concerned, it focuses on identifying cost, a monetary valuation or assessment. Okay, assessment of resources and their allocation to products, services, inventory, or other items. It is a function of management accounting, right? As you can see over here, um, as an example, the roles of three professionals work at a furniture company are presented below. One is Aisha, which is a cost accountant, right? So the description of her job is like she works as a cost accountant at the large furniture company. Her work involves recording the cost of products and services. These costs are as a type of functional information. Furniture company makes four different chairs. Aisha is asked to record how much it costs the company to produce each type. To do this, she often looks at historical financial information, how much things cost in the past, etc. Then we have Ajay, a management accountant at furniture company. He has several responsibilities. He looks at past and future costs. He sometimes work with non-functional information. For example, he can be asked to investigate how many workers have been lost because of employee sickness in the last year. He provides information for the company's managers regularly, usually monthly, and whenever necessary, he advises on specific aspects of the business, which sometimes involves planning, decision making, and control. Then we have Kalk. He must prepare the financial account for the company at the end of each accounting period. The financial accounts he prepares show how well furniture company performed during the period under review and the state of affairs at the end of the period. Most of the information he deals with is financial data based on past information, right? So let us compare management accounting and financial accounting. The aspects users of information. Management accounting users are it is for internal management only, it is for internal purpose only. Okay, then we have financial accounting, shareholders, banks, creditors, potentially investor, tax authorities, government. Requirement to produce voluntary, no requirement to produce, it is required by law. Presentation and content governed by law and generally accepted accounting practices. Format of information, as far as management accounting is concerned, it can take any form. No legal requirements. Best practices are developed and used. Presentation regulated by law. Example: companies, acts, and profession through accounting standards. The content, financial and non-financial, predominantly current with predictions. Example: the budgets. For management accounting, and for financial accounting, a summary of mainly past historical information with supporting notes. Okay. For level of detail for management accounting, more detailed example: cost and revenues by department, product, for financial accounting as required or prescribed by the law. Frequency of preparation as frequently as needed by the management, quarterly, monthly, weekly, daily, or on demand for management accounting. And for financial accounting, usually annually, more frequently for certain types of public interest, for example, companies, purpose of information used to plan, control, and make decisions. For financial statement, financial accounting, it is stewardship and investment decisions, basis of valuation, standard costs, relevant costs, marginal costs, absorption costs. Other bases may also apply historical costs as modified by the revaluation of certain fixed assets and fair values as required by financial reporting standards. Okay. As far as the planning, decision making, and control is concerned, managers require information for three essential activities. And what are those three essential activities? Planning, decision making, and control. Right? So in planning, managers plan a course of action for the future. For example, setting objectives such as sales, target for a product, for region, etc. Selecting the best method of achieving the objectives. Plans can be financial, like a budget. Then we have control. Managers use information to check how the organization perform compared to their plans, comparing actual results with planned results, for example, variances. Okay. Review strategic plans when circumstances change. Decision making, where managers use information to help them make decisions about the organization. For example, preparing information for investment decisions such as whether to invest in new plant and equipment, making decision on actions to take, how much of the product to make, what price to set, how to reduce cost, etc. Management activities, relationship with data illustrated, data collection, planning, decision making, results, forecast, or target. Some examples in practice: marketing manager, costing decisions. Well, marketing managers, I need to know how much the product costs, how many units we can produce, and how many we can sell to our customer. This information help you set the right price and calculate how much profit we can make. CEO, strategy decisions. I need to know what our competitors are doing. How much do they sell their products for? Are they launching any new products? How do people feel about our products in comparison to the competition? This information helps me make strategic decisions about the company's future direction. Factory supervisor control. I need to know how our manufacturing output is performing against the targets. Are there any worrying trends and inefficient in the processes? Are we wasting money or resources anywhere? The information help me to control efficiency and performance. Then, treasury manager. I need information about the amount we will spend each month and how much income we will receive so that I can plan our cash requirements. I can borrow money at much better interest rates if I know our needs. Production manager, investment decision making. I need to help to assess investments and understand the cost of buying a new piece of machinery. For example, does the future income justify purchasing an expensive new machine, or should we go for something cheaper? So here, as you can see, managers need the information to help them plan, control, and decision. Different types of organization will have varying information needs. Different manager needs varying needs. Okay, for example, a sole trader will know what is happening across the whole organization more than honor than managing large multinational organizations. Managers in large organizations must collect and summarize information they require from many different sources. Okay, as far as the strategic, tactical, and operational planning is concerned, different types of planning and decisions are taken at each different levels in the management hierarchy. This level has been identified of Robert Anthony as strategic, tactical, and operational. Okay, management level. Senior managers carry out strategic information. It is concerned with making significant strategic decisions for the organization, such as setting businesses objectives and deciding on corporate strategy. Strategy management decisions often involve long-term planning. Then we have tactical. Tactical management is carried out by middle managers and relate to business control and the allocation of resources. It involves developing plans, often medium term, for the implementing strategy, manages directions. Okay, it includes tasks such as annual budgeting and other medium-term planning, informing, implementing to plans when approved by the senior management, and monitoring actual performance against them, ensuring that the day-to-day operation lead towards achieving long-term strategy goals. Then we have operational one. Juniors managers or supervisors usually carry out operational management. It is concerned with the implementation of tactical plans, management of short-term, detailed day-to-day operations. Operational management is the lowest level of management. Well, below is an illustration of the task performed by the various management levels in potentially expanding the operation of successful farm, right? Um, Here is the example. I have given you in the notes as well. You can do it yourself as well, right? Though task deciding to expand operations by buying more land. Whose work is it? Management level, resources involved, time frame. Okay, deciding on how to fund the purchase of more land, identifying suitable land for purchase, arranging finance with bank and investors, recruitment of employees to work on land, plan forecast, budget for profits and revenues, monitoring actual progress to plans, crops, decides daily workloads, gave operational instructions, manage day-to-day operations. So, well, first one, as we can see, it at management level, it is strategic. Resources involved are high, impact long term. On deciding how to fund the purchase of more land, it's strategic. Resources involved high, impact long term. Identifying suitable land for purchase is tactical. Uh, Resources involves and it's for medium term as well. Arranging finance with banks and investors, it's tactical. It's for the medium term. Recruitment of employees to work on land, it's tactical, it's medium and medium term. Plan forecast and budget for month profits, tactical, medium and medium term. Monitoring actual progress to land plans, tactical, low and short term. Plan costs, decide daily workloads, etc. Operational, it's low and it's for short term. Now, data information. Data and information. What is data? The raw facts and figures. It's data. For example, I have to write A, B, C, 1, 2, 3. Does it giving any meaning? No, it's not giving any meaning. It's data. Information. Data that has been processed to have meaning. For example, Ali score 98 in M8. So is it giving some meaning? Information. So data processed into information. Data is information in a raw and unrecognized form. It is a fact and figures that give information meaning and context. Information is data that has been sorted, summarized, or otherwise made more easy or useful for easy to work with. Information can be presented in many different forms. For example, numbers can be put into a table ability to organize them and give them meaning, or they can be presented in reports, graphs, and charts. Classifying data. Data information can be categorized as either primary or secondary. Primary data is data that has been collected directly from the source. For example, furniture company surveys to find out what the public thinks about its future before launching a new advertising campaign. This data is known as primary data because it was collected directly from the source with the specific aim of finding out what the public thinks about furniture company products. The resulting surveys report is primary information prepared to help managers to make decisions about the advertising campaign. Then the secondary data is data collected by the someone other than the primary users. Furniture company could purchase data on current trends in furniture products as well as furniture companies themselves from research firms or universities. Internal sources. One way to classify information is whether it organizes from inside the organization internally or from outside the organization externally. Okay. Internal source, the accounting system and records. The organization accounting system collects transaction data, including sales and purchases. The systems allow the organization to monitor its financial performance, provide information to help managers make informed decisions. For example, managers can evaluate the sales level of different products to determine. They can also look at the details of purchase orders to send to suppliers and good receive include in the inventory records. Employee at the level of organization impact and communicate formally and informally while performing their duties. This interaction results in insights and information that should be captured or obtained. For example, document conversations during meetings and maintain a central copy of significant email conversations. Gather information from staff through interview, internal surveys, and word of mouth. Production records. In a manufacturing production organization, production records include information relating to the production level. For example, the production records would include the usage of material, fuel consumption, machine setup times, machine downtimes, required maintenance. In a service business, production records include the time spent by the staff on the different clients and tasks. This information helps managers establish client fees and assess the efficiency and profitability of operations. Administrative and other records, organization record information to help them carry out operations and administrative functions. For example, managers can consult employee records maintained by human resources to determine whether current employees have relevant experience and training for new projects requiring a specific skill. The wages and salary information held in the payroll system can help forecast organization cash flow. The policies and procedures manual is another valuable internal source of information. External sources. Multiple different sources of information can be gathered from outside an organization. Some of this information is gathered routinely by an organization on an informal basis to ensure that the organization complies the rules and regulation of doing business. They need information about tax rules, regulations, etc. Organization must also collect market intelligence routinely. One source of marketing intelligence is make marketing research undertaken by the organization or specialized agency. Sources of external information include government and government agencies, media, newspaper, magazines, televisions, libraries, information services, online sources, consultancy businesses, journalists and other reference works, professional bodies, customers and suppliers, bankers, trade organizations. Across all sources, much of the information gathered is now obtained in digital format. Technology developments, including the advances of computer systems, etc. Okay, sources of data: machine, transactional, and human. There are three primary data sources: machine sensors, transactionals, and human. Data sources: machine sensor and data description. Data gathered from a device containing a sensor that detects data from the physical environment. For example, sensors can read data such as temperature, motion, light, and proximity. For example, supermarket chains often record the temperature of their fridges in stores using sensors and then use data to predict when particular set of fridges will need to be serviced. Okay. Transactional data, data relating to the transaction of a business such as data recorded when products or services bought and sold. Transactional data details such as include the date, cost, price, quantities, payment methods, compared with data such as the name and address of a customer known as master data. Transactional data is created frequently and changes frequently. Then the human or social data, data related to humans from social media, handwriting letters, phone calls, questionnaires, surveys. Heading can include the user's location, for example, the place of the person posting on social media, language, for example, English or Chinese, emotions and preference. It often needs human interpretation, for example, to establish and understand what people think and feel. Direct and indirect data capture cost. Direct data captured directly from the source. Indirect data, any data which is not obtained directly from the source, probably obtained through secondary sources and aggregators. Data cost of information, the most significant cost associated with management uh, accounting data and information can be classified as day-to-day running costs, costs associated with capturing, processing, analyzing, using data. For example, costs associated maintaining a system, customer data as they make purchase on e-commerce platform. Storage costs, that is an example could be due to maintain on-site storage server or subscription to cloud storage, etc. Direct data capture cost of gathering the data into the system in the first place. Direct data capture methods include use and processing of data forms either manually entered into a system, use machine reliable barcodes, QR codes, or RFID tags, artificial intelligence or algorithm processing, other information workflows and system for large scale data capture such as measuring devices and associated systems, laboratory work, sensors on the manufacturing line, survey drones, etc. Indirect data capture cost might have a transactional cost, meaning it was purchased directly from another entity such as research firm or university. There might also be costs in verifying the reliability of data, such as establishing sources. Then we have good information. Well, for good information, remember it should be accurate. That is the many meaning, right? And what is that accurate? Information provided to manager should be free from significant errors in most circumstances. Insignificant error will not affect the information though. Then it must have been complete. Information should include all relevant information. Then cost effective. The financial benefits of the value of the information must outweigh the cost of obtaining the information. Then user targeted. Information should be tailored to meet the needs of the recipient. For example, some managers may require additional information on specific business areas. Then it should be relevant only information directly to the related to the decision making considered and should be provided. Okay, it should be authoritative. A source of information should be reputable and reliable. Information should be timely. Use information must be received in time to influence or a decision. I'm teaching you MA. I should have been completed before your exam date. Otherwise, it has no use, right? Uh, Easy to use. Information should be concise, presented clearly, understandable, and communicated using an appropriate communication channel. Overview of big data. Collections of the data that increases exponentially over time with much volume, variety, and velocity for traditional data processing methods to analyze efficient. There is more ready to access more data today than few years ago. That's because of change in technological environment over the recent years, right? So use of smartphones, tablets, etc. Organization have vast volume of data that can use support their planning, control, and decision making. If this large volume of data is analyzed correctly, management accountants are provided with more good and quality information and therefore able to plan, control, and make decisions. Okay, so we have various aspects of big data, that is velocity, variety, veracity, value, and volume. Volume, the volume of data being captured from transactions, social media, customer relationships, management system sensors has explored in recent years and continue to do so. Velocity, the speed or velocity at which data is being streamed into systems and organization, and also increasing rapidly. Variety, the variety relates to too many types and forms of data collected and generated. Structured data refers to data held in defined file structures, for example, a transaction file. Unstructured data includes image, audio, and video files, free text in social media posts and emails. Veracity, data quality relating to accuracy and timely truthfulness is essential. Effective decision making. Practical analysis to provide valuable findings can only be done if the data collected is the includes consideration on the reliability of the data source value. The benefit of having data for the organization must be higher than cost of obtaining it. Okay. Use of the big data by various organizations. The process of divining meaning from data. Data analytics is the collection analysis of data, find patterns and draw conclusions. The more data is available, the better the resulting analysis and findings. Data analytics can be significantly uh, enhanced using artificial intelligence approaches such as machine learning. Machine learning is an appropriate whereby developing build a program that creates a model based on the set of initial data. Model can then be used to, for example, make predictions such as customer demand for product X. The program learns from the additional data by comparing it output to the results and adjusts it accordingly. So as data about real world. Okay. One of the most significant benefits of big data is impact on decision making. Big data combined with data analytics, other technology provides better business insights and enable better decision making. Organizational strategy. Big data can be used to simulate many different scenarios rapidly and relatively cheaply compared to time and involved in human developed scenarios. This method can determine the likely best markets and approaches to meet growth and profitability ambitions for profit focused businesses. Customer satisfaction and forecasting demand. Big data analysis show organization to understand their stakeholders' preferences and needs. For example, customers can be sent shopping offers tailored to their habits and needs. Big data from sources such as visitors, website numbers, customer surveys, social media posts can be combined with data relating to economic climate, comparing to spot trends, predict customer demand, prevent issues from arising. For example, a solution to relating to addressing issues early in GNIP. This is a service that collects data from social media. As you can imagine, social media creates vast volume of data every hour. Analysis of social business decision making. This is sometimes called social listening product or service or attitude towards the natural environment. And this information can be broken down into demographics to find out what group of type of person is expressing the opinion. Now, what are the problems with big data? Some of the limitation of the management information apply to big data as much as some of form of information. For example, data which is incorrect and incomplete can hinder rather help with decision making. Okay, big data veracity. Data needs to be relevant and trustworthy, but data can sometimes be inconsistent or biased. Okay. The sources of big data include social media and the internet. There have been numerous reports about people being dishonest on social media and website containing fake news. If this is absorbed into data sets having equal validity as transactional data, such as invoicing data, then the resulting analysis may not be sound. Every transactional data can be problematic as the social norms change. Historical data might not be sound basis for decision about current issues. For example, analysis to assist recruitment, which is based on the backgrounds of successful application from past 60 years. It is likely to advise hiring staff to the social changes that have taken place in more recent years. Big data technology. The technology is consistent, evolving, and it can sometimes be challenging to implement and costly. Big data analysis, businesses, and suitably skilled data analytics, which are currently in short supply, se- uh, security and privacy. Security and privacy laws vary across the world. Businesses must ensure they are not violating regulations when they source and store data. Limitation of management information. If management information lacks the characteristics of useful information, then it may cause management to make wrong decisions. Information can therefore some time and costs are important. You can more spend producing information, the more the information cost company. Computer systems reports may contain errors that produce a lot of information used by managers. Computer system reports generally look very professional, so managers might assume that the information is accurate. However, this depends on whether the information has been correctly input into the computer. If it is not input correctly, how can it be correct? Right? So information can be based on incorrect assumptions. Those who gather management information may allow assumptions such as general economic environment, the behavior of competitors and customers' opinion to affect information they produce. The incorrect assumptions can change the meaning of the entire information provided, right? Too much focus on financial information. A lot of management information is financial, and sometimes the role of the other factors may be overlooked. Looked. For example, the marketing campaign of a competitor may affect sales, right? So far, so good. We are done with the our first area, management information. It's for you, right? So I hope it's crystal clear to you, and that's it for now. We'll continue in our next lesson.